Good morning. It's Harvey Jackson. I'm at Red Deer at Agri today, and we'll have a walk around and see what this is all about here. I've never been, so looking forward to it. Wheat futures hit a 10-week low. I'll be talking about some slides there later on this. Uh, some of the major wheat exporters, Russia, all still selling wheat at cheap prices. Palm oil has declined as well, pressured by crude oil prices. There's been a lot of talk about Trump and what he's going to do for trade, um, and I just highlighted this area here in particular, talking about veg oils tightening across the world, and USDA projects that the U.S. global rapeseed oil supplies will shrink by 13% over the coming year, and sunflowers as well. I will show some more slides there, and one thing to note here is Indonesian palm oil has dropped because they've included and start their own renewable diesel program, and they've really ramped that up. And there's also some changes that a lot of people are worried about over the subsidies that are for the clean energy projects. We'll see what is going to get a result of that when Trump comes in as well. So here I'm just going to go quickly through ending stocks for the world. So corn actually lightened up, which is a good thing. And you can see when you look at some of these other countries that actually have ending stocks, and you basically have to disregard China and its number because they just hold huge amounts of stocks. But these are stocks at least for the exportable position. And the same thing with soybeans here, but soybeans have grown quite a bit, and that's the worry with that crop, and even our canola would be under pressure because of this huge build of world ending stocks. And you can see, and again, disregard China, but you got Brazil and Argentina, and then in third place really is the United States, and that's who the major exporters are. So world wheat here, you can see we've been declining since 2019 in ending stocks. Maybe just basically flat there, but and this actually increased just a hair this last USDA report. But you can see United States has a good amount of the ending stocks, and even the Russian they basically clean the pipes out, and same thing with Europe. They actually have a huge export program, and here we are way at the bottom, Canada with a 4.5. Now that is not the StatsCan number. This is the USDA number. A lot of their numbers come from those countries when they actually release data as well. Here's canola rapeseed. There's virtually no change on this last USDA report, and with decent ending stocks. That I'm not going to dispute, but it could be even tighter for both these two countries here. Basically, the only exporting countries that there is there. So here's the production estimates, and they're saying that we've produced 20 million metric tons. That is becoming less and less factual as we move forward. Same thing with Europe. So there's the question marks that I have here, and even Australia. There's some doubt that Australia will get 5.5 million metric tons of production there as well. Palm oil production estimate. This is a little bit more unknown for myself, but so production I think is decreased uh, a little wee bit in both these countries. Maybe not showing up in the production here, but there's been a pretty good increase regardless of production, and that's what this is basically showing here. So I'm going to just quickly go through a few slides. Where is the drought? And you can see that there's some drought build in this area here, or it's drier, but then you can see that the major growing area is actually got a lot more moisture. And here's your planting pace, and you can see that it's definitely in the window, and look at the where things have gone. The red line is definitely picked up pace. It was a little slow, and then picked up pace very fast. Here's your percent of normal moisture. You can see that there's a lot of dryness now in Manitoba, and you get Edmonton to Calgary is dry as well. A little bit more moisture in the middle. U.S. drought monitor, a lot more build in drought, but some rains have come through the last couple of weeks, and you're seeing some of the drought actually decrease. You can see that there's a decrease in drought in some of the major crops. Oil seeds. So let's just go through canola. Canola hit it high 3 days ago with some downward movement last couple of days. but still in the higher area, and still worthwhile looking at some catch-up sales if you need to. Here's your new crop. My sales targets were in this area for the first chunk of sales, and you can see that we've gotten there and now pulled back a little bit and that's for the new crop canola November of 25. Um, One other thing I want to point out is just percent of full carry. This is using 8% interest rates, so it could, it could be changed easily. But you're looking at January contracts with a 70 to 70, 77% of full carry, almost paying for all the interest. And here's you got your 12 cents per ton per day of storage costs in there too. So if you take that storage cost, interest will definitely get paid for. Rapeseed, it's green again today and up, and you can see that that's adding a little bit more pressure on the differential between the canola and the rapeseed. So it's $146 thereabouts, higher for European rapeseed priced in Canadian dollars. Soybean oil, still within the range, but it's had some long tails of going down here, still above the 200-day moving average. Palm oil pulled back off and below the 5,000 ringgit value, but still well supported in its upward trend. Crude oil, it looks like it's on its way down. Uh, if it's going to break through if these are support lines at all, whether we're going to break through there and get some cheaper fuel in the world. Soybeans, longer term trend, looks like we've uh, downward trend touched, here, if we're just going to look at trend lines, and we're definitely waving a little bit lower. The Canadian dollar is actually continuing to make new lower lows here. Now we'll have to see if this is going to continue. It's usually puts a lot of pressure on everything we buy, but it supports the canola price and supports the wheat and soybean basis values. But I'd rather just have higher commodity values and a medium kind of mid-range trading Canadian dollar would be probably more beneficial. Wheat, ugly trend, and some pretty red for the last week basically, and constantly going down. So if we look at longer term trend and where does that look, we're not anywhere close to breaking through that trend line, and you can see with the cost of carry on wheat with 8% interest rates, it's actually paying you to push it out to March and May and pay for your interest and your storage costs. So that's something to consider there if you don't need to make the sales. Uh, here's your Chicago wheat, and if you look at the longer term trend, it's basically just you know pushing above or pushing below and not trading above it here. And you can see the same thing in Chicago. And here's your Chicago longer term chart as well. And yet here corn broke out above. So if there's anything that can hopefully pull the wheat to a higher level, it would be the corn. Two reports to really pay attention to next month. It's nothing else that's significant coming out this month that I know of. Maybe ABARs or somebody like that, which I don't have. I'll look into that one. But December 5th is the StatsCan report, and then December 10th is USDA. So looking forward to chatting with you again tomorrow.